Hi guys, welcome back to another video, another vlog, another walk and talk video where we are going to be basically going for a bit of a stroll, getting a bit of exercise, getting away from the desk and, talking a little bit about cryptocurrency. So today's topic is an interesting one. We are going to be talking a little bit about the Fed, their ability to essentially have effects on the market, both from a stock point of view and of course a crypto point of view. So as I get into today's video, if you do find it useful and informative, smash that like button. I really do appreciate that. If you are new to the channel, why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. Right, let's get right down into the meats of today. I've got my phone with my notes on because there's a lot to talk about when it comes to the Fed and the ability for them to affect the markets. Now, Chris actually went and put a post on X and basically talking about their ability to affect certain things, and ultimately it's a really interesting thread if you haven't already checked it out. So I do urge you guys to go and follow us on Twitter and or X as they say now, and actually check out what that thread is talking about. But let's go into a few points here. So essentially the Fed's monetary policy decisions, particularly interest rate changes, have a huge impact on the stock market and a huge impact on the crypto market, right? We know this, we've seen it throughout 2022 and kind of where we are now in 2023 as well. Now, we're going to talk about a few different points when it comes to the Fed and kind of what is going on. So first thing first is basically there's an increased risk appetite. So let's talk about this. Here's what to expect if you were to see Fed rate cuts. Now, Fed rate cuts essentially means that there's going to be a decrease in the interest rate rather than an increase in the interest rate, right? So through 2022 and 2023, we've seen nothing but increases or pauses. And well, we have a cut coming up in our opinion, and it's quite an important thing to understand. So what does it mean? Well, essentially what it means is there's going to be an increase in the risk appetite. Basically, if we go into this, right, low interest rates make traditional investments like bonds less attractive, leading investors to basically seek out slightly higher risk investments such as cryptocurrencies. Okay, so the next thing we need to talk about is the capital outflow from risk-off assets. Now, with reduced risk aversion, investors may withdraw funds from safe havens assets, specifically like gold and real estate, and basically diversify into more risky assets such as crypto. So this is an interesting one because essentially what we're saying here is that whilst the interest rates are high, then you actually do typically see money flow to more safer assets rather than risky assets. Okay, so you tend to find that people tend to gravitate more towards gold, silver, real estate, things like that. When interest rates cut, you actually tend to find that people kind of actually look for slightly higher risk assets that have better yields. And that's really where crypto comes in. And then brings us to the next big point, which is the potential huge rise in percentage gains. Now, the big price surge, essentially, the combination effect of increased risk appetite and capital inflows could trigger a surge in cryptocurrency pricing. And so what we're talking about there is essentially that we are going to be seeing a significant amount of money flowing into these risky assets, and therefore there's a potential for a significant surge to the upside in terms of price. And that appetite is going to increase as the interest rates decline. So when we see the Fed potentially on the cusp of a pivot, which would basically be a decrease in interest rates, is when we start to really see and can start to actually appreciate the amount of money that's going to flow into riskier assets like cryptocurrency. And so that brings us to the next big point, which is price volatility on the short term. Essentially, whilst price cuts or rate hike cuts are likely, and we are likely to see a significant long-term gain, we are going to see a short-term crash in the market. Now, this typically happens because when the Fed do a pivot or start to reduce their interest rates, is pretty much when the market is at its worst, as in liquidity has been dried up within the market and people are really struggling on the day-to-day. And so this is the point in time where most assets actually get sold off in hopes of actually sustaining their lifestyles before before things get worse. So usually a Fed pivot or a cut in interest rates tend to happen only when the market is its most vulnerable. And so you see this short-term volatility where there's immediate move to the downside, followed by long-term appreciation. And so that brings me to my next point. Not all cryptos are the same. We cannot expect the same results from every single cryptocurrency. Some may go up whilst others go down, and vice versa. Now, although broadly speaking we expect when interest rate cuts are to occur, we see this big move to the downside on the short term, doesn't necessarily mean that every cryptocurrency is going to be going down at the same kind of pace or at the same level or even potentially at the same time. We might find ourselves with a 20% correction on some altcoins whilst 50% on others. This essentially is basically to do with the community, how much has already been sold off, who's invested now, are they likely to kind of come out of those positions or not. There's a lot of different data points that you have to kind of look at before you can kind of ascertain whether or not you're going to find a lot of cryptocurrencies going down 50% and other ones going down 20-30%. But ultimately, one thing that I'm pretty consistent on and pretty confident on, generally speaking, is that we are to see a big correction in the crypto market. Now, when the Fed do eventually have their cuts and they do eventually pivot, we are going to see that money flow change. We're going to see money flow out of those risk-off assets into the higher risk investments, such as cryptocurrency. We are going to see essentially a big move to the downside on the stock market and on the crypto market, at least on the shorter time frames. And we'll then see immediate, in my opinion, move back out. Very similar to kind of where we were in March of 2020, where we see a significant pull to the downside and then a straight corrective move back to the upside. Essentially, it's almost like a flash crash. Now, I'm expecting Bitcoin to kind of move maybe 40-50%. And I'm expecting altcoins to move kind of 50-60%, maybe some more. Like I said before, not all altcoins will behave the same. We won't see all altcoins kind of moving down in tandem. You might find that, you'll have some altcoins that had really strong fundamentals and really strong technicals actually holding up incredibly well, with bottoms most likely already in. Let's just name a few. Chainlink, Solana, maybe even something like Quant looks like it has a pretty good technical ground to say that support is there and it's not likely to drop down into new bear market lows. The same can't necessarily be said for some other altcoins, such as VeChain or Cardano, or maybe even XRP. I think when it comes to Bitcoin and Ethereum, I think there's a strong chance that the bottoms are already in, and we'll probably find good levels of support. Bitcoin at $20,000, and maybe you'll find good support for Ethereum at around that kind of, I want to say $1,200, $1,100, something to that effect. I'm not as close to Ethereum as I am to these other cryptocurrencies like Bitcoin, Cardano, VeChain, XRP, and so forth. But for the most part, you kind of get the idea. Not everything is going to be behaving the same way, and we're going to see some really good opportunities to get into the market when the Fed do pivot. Now, why am I talking about all of this today? Something that I think we are likely to see in early 2024. Essentially, the Fed seemed to be gearing up for a bit of a pivot. And when I say a bit of a pivot, I mean an interest rate cut. Now, when they do cut their interest rates, and if they do this in early 2024, that lines us up beautifully for what is potentially going to be one of the biggest bull markets. Essentially, we'll have that immediate kind of move to the downside, 40-50% crash, huge accumulative phase where retail investors can really double down on their investments, right? Work as hard as you can, get as much fiat as you can, dollar cost average as price moves down. That's going to be a massive opportunity. And then what you'll find is, probably towards the end of quarter one, beginning of quarter two, we have, of course, the Bitcoin halving event, maybe even, a Bitcoin spot ETF launching at that time as well. I think we're going to be seeing some real good growth across the crypto market. We're going to see some fantastic opportunities be presented to every retail investor out there when it comes to cryptocurrency. So let me know what your thoughts are on all of this in the comments down below. Do you align to this kind of short-term flash crash corrective move based on the historical movements of a Fed pivot? Or do you think it's just up from here, 50K, 60K, 100K, new all-time highs, and all that kind of stuff? Really interested to kind of gauge as many different people's thoughts and opinions on this. Join us down in Discord if you haven't done so already, and we can discuss things further down there. I'm going to probably get out of this very frosty wood and work my way back to the desk, take a look at the charts, and then jump down into the Discord. So if you are there, you'll find Chris, myself, JB, Steve, all down in that Discord server, and you can talk to any of us down there as well. So links in the description down below. And with all that said, done and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one. Outflow from risk-off assets. So basically, with reduced risk aviation, this is going to need a lot of editing. Nick, future Nick, edit. Capital outflow risks. So the next thing that we need to talk about is capital outflow and, from basically risk-off assets. Which brings us to the next point, short-term price volatility. Now, for this part, we basically see while long-term price appreciation is likely, the initial reaction to rate cuts is likely to lead to a crash. Cut all of that and start again.